I'm Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check. People are saying it's the best two-person podcast in the history
I-
of Cabot Wealth Network.
I've heard people say that. That's the word on the street.
Yeah, that is what people say, especially on this podcast. They say that. Thanks for joining us. Good to see you, Brad. A day early this week. Commitment tomorrow, but I'm sure people won't complain about that. Brad, we haven't talked since last week. People are we're really being us here and not being totally mainstream. Saw a movie on your recommendation, dragged my wife to it, a horror movie called Weapons, which I guess it's not that niche. It's made like almost $100 million at the box office already within what 2 weeks. Made by Zach Kreger, a former comedian or comedy troupe guy, who it's his second movie. Like, he did one a few years ago called Barbarian, which I really liked. It's for sickos, both of them. But apparently there are a lot of those out there. And you didn't fail me, Brad. It was quite good. And you said my wife was a little squeamish about, worried about certain scenes coming, and you sort of warned us. So I think we navigated that okay, and no one came out of it traumatized or anything. It was good. I give it a 3.5 out of 4.
Yeah, I missed one. I remembered well,
You
you
saw that one,
reminded me
yes.
after the fact. I was like, oh no, there's only these two moments where somebody's squeamish is gonna have a problem, and I had totally just glossed over the third one.
Yeah.
So I let you down,
No,
which
no, no. You did well.
well,
I could tell you're concerned. You texted. We were like still in the movie when you texted, but yes, success. I think my wife liked ish it, good enough, and I really liked it. So
yeah,
anyway,
it
recommend it for those who, if you're squeamish, just like bring a hat, look down at a couple, three scenes. But it's good if you want to be scared. I actually wouldn't even say it's that scary. It's just a good story. It's sort of like, what is he pitched it as like Magnolia meets, I don't know what it meets, some sort of horror movie. Magnolia, which is like the
you know,
multiple character movie or stories told from the perspective of multiple characters. I guess Pulp Fiction is kind of this way too, and a bunch of movies, and all the stories intertwine eventually. And it's good.
yeah, I thought like exceptionally well made.
Yeah,
It did the same thing that Barbarian did, where it starts off with like, I don't know, biting social commentary and then takes a hard left turn
yeah,
into something totally different. I'm hesitant to talk about it in depth because
right.
I went into it blind and I was really glad that I did. So if you liked Barbarian, go see it. If you didn't, if
You
it
like
wasn't
horror
for you,
movies? Go
probably
see it.
skip it. If you like horror movies, go see it. It's like,
Yeah.
oh, here's this social commentary and then sort of Kreger's take on these pretty common horror tropes or horror ideas. Great movie. Although 28 years later has been sticking with me a little bit more on the
Yeah,
horror
I've
front.
not seen that one yet. I will at some point, and
That one you're gonna have to go solo. That's way more gruesome
I knew
than
I would. Yes.
than Weapons was.
Yeah, that's part of why I haven't been yet. Okay, enough about horror, and hopefully we haven't disturbed or turned away too many people. What are we going to talk about today in terms of investing?
So we are going to talk about growth stocks having a little bit of a meltdown, fall apart, etc. Jerome Powell speaking at Jackson Hole tomorrow. We'll get into that. And then a couple of major retailers reported earnings. Target and Walmart both reported. We'll offer some insights there. Then Michael Brush of Cabot Cannabis Investor is going to join us to talk about that sector, which has done really well for the month and slowed down a little bit of late. But before we get to that, Chris, you are up to defend your take this week. The market pullback will be good for all investors. You have 90 seconds. Go.
Okay, so I've said a while ago, one of my takes a month or so ago, I guess it was a month ago, that we would get a pullback of at least 5% in the next 2 months. I was looking like it might not be right for a while, but it seems like we are going to get there. And frankly, I never really doubted that we would get there, at least in September. So growth stocks, as we're going to talk about in just a few minutes here, growth stocks started to crack first. Mike Santolo has been banging the drum on that. They are down. They're down about 8% as of yesterday, up a little bit today. And usually those are sort of a precursor as money sort of rotates out of growth stocks, which has led this rally since the April bottom, rotating into other things like value. But when that happens, the market itself starts to pull back a bit, and hasn't pulled back much. Nasdaq down about 2.5% right now from the highs. Um, but regardless, even if we go down, Nasdaq goes down 5, 10% more. This is good. I have been skittish about investing and going, all in on certain positions that I like with the market, as we said, price for perfection the last month or so, given the huge run up. I am much more excited about investing in things after a 10, 15% pullback or, a little less. And I think you should be too. I think these are going to be great opportunities on the other side of this. Pullbacks like this are very normal and are things that you want in a healthy bull market.
All right, time. Yeah, I agree with you on the anxiety inducing conditions just right now. Like,
Yeah,
I don't know, we talked about the Buffett indicator being at like historical high valuations. Retail investors' allocation to stocks are historically high. Vanguard just came out and recommended a 70-30 bond stock portfolio. They don't see much upside over the next decade,
yeah,
which like
it's extreme.
that it is. And that's another version of the this time it's different thing, right? Where it's like,
Right.
okay, well, me saying growth stocks are going to triple from here would be a this time it's different. But me saying you're not going to generate any kind of return for stocks for a decade is also it's just a different side of the same coin. So I wouldn't endorse Vanguard's recommendation. I mean, like, I don't know, we've seen it before after the .com bubble burst where it would have taken you 10 years to get growth stocks back. But for the asset class as a whole, it seems overly conservative. But yeah, I don't know. Taking a breather would be good. We've had like since that April low. I think we put together a string of 53 or 60 days or something without a single red day in the Nasdaq.
Yeah.
Um, Stuff is priced for perfection. The economy's creaking a little bit. I would appreciate a breather, certainly.
Yeah, I mean, we're headed into the season where I mean, September is easily the worst month in the calendar historically. I think it's the only month with an average pullback of more than 1%. It's like 1.5% or something like that. Nothing else is even close. Um, Wall Street returns from summer vacation, starts selling out of laggards right after Labor Day, and that sort of triggers it. Started a little early this time, and I think it's because, as you said, price for perfection. Earnings season is mostly gone. I mean, there's still Nvidia and uh, Walmart and Target, which didn't help, which we'll talk about. Um, but earnings season is mostly over, so that's sort of gone as a catalyst or something that's going to prop the market up. Um, and valuations were the highest they've been in months, or I think even more than a year. Um, so I think we were due for this, especially given all the uncertainty out there, and I think it's a good thing. I don't think the bull market's going to collapse. There's sort of two forces colliding. Overvalued market with a lot of uncertainty, and no earnings season catalyst at the moment. But bigger picture perspective, the AI catalyst is still there. Interest rates, which we'll talk about, are likely to come down in the coming months. And those two things, I think, as Mike wrote this morning, are sort of two things that'll keep fueling the bull market going forward. But I think, we're down, as I mentioned, S&P down 1.5%, NASDAQ 2.5% from highs of like a little over a week ago. I think both of those are going to get to 5% or more. NASDAQ maybe even 10% or more. But I wouldn't I wouldn't fret it. I would just see that, sell out if you have any stocks that make you uncomfortable, and it's totally falling apart. There's been a few of those. Um, Sell out of them, but I wouldn't, sell wholesale. I'd stay invested because I don't think the bull market's going anywhere.
Yeah, the on the sort of rotation front, it's not like we're seeing tech collapse or anything like that. I mean, there have been outliers that were high flyers that we'll get into that have that were quick gainers that have shed a ton. We've talked about Circle a couple of times. They're down 40.6% in the last month. For the most part, though, we are seeing the high flyers get reined in and not
Yeah.
get cut loose,
Yeah, let's go
right?
right into that. Yeah, let's mention some of those.
Yeah,
Yeah.
so it's not like we're seeing catastrophic selling like we saw in April or anything like that. We're seeing overperforming positions that were sort of the highest risk on get pared back heading into what is essentially Powell's last chance to reset market expectations, which we will also get into a little bit later. But like something like Palantir, right? That's sort of been the poster child of the growth stock rally since April. Um, all they did was round trip their 20% August gain. So
Hmm.
they're up 2% in the last month, give or take. They were up as much as 20% earlier in August, and they've cut that back, but they're not collapsing. Um, Oracle is down 5% in the last week. Microsoft down 2.7% in the last week. Broadcom 5.8% in the last week. These were all disproportionately outperforming the broader markets since April's lows. Honestly, for the last couple of years, since the AI narrative sort of took hold, um, we're seeing them take haircuts. They're not getting tossed aside. Um, I mean, Meta did come out and say that they're going to cut back on their AI spending, so maybe that's a sign of things to come. Maybe the fear, right, is that this selling turns into more intense selling, but we are not seeing signs of that yet. We're
Yeah,
seeing signs of people reining in high flyers.
right, exactly. Yeah, just to add a few more names to what you just mentioned, CoreWeave, CRWV was down 55% at the bottom from its highs. Uh,
For
Apple,
CoreWeave, I do
what's
want to
that?
add one. I do want to add one caveat for CoreWeave. That also coincided with the end of lockup expiration after their
Right.
IPO.
Yeah, that's
So
probably
there
the
were,
most extreme.
yeah, there's a bunch of people that, the IP. I don't remember where the IPO priced in the 30s. I think 37 maybe. And then
Yeah.
it ran up, it more than doubled on the first day of trading and had tripled or quadrupled at its highs. So a lot of profit taking from people that were vested shareholders, that were employees, stuff like that. So
Right.
asterisk there, but sorry, go ahead.
And then SMCI down more than 30%, AppLovin, APP down more than 17%. So yeah, I mean it's like you said, it's the highest flyers, the most um, techie AI infused plays that have really benefited from that run up the last few months. Yeah, I mean Palantir. I didn't realize Palantir was still up for the last month, and that says it all. 2%. But that sort of really puts things into perspective. That while growth stocks are imploding at the moment, or have for like the past week, and as Mike notes, that Nasdaq 100 is flat in the last 2 months. I think the IBD 50 growth investors business daily 50 growth index FFTY, that's down in the last month. Um, these are stocks that also had run up, you know, a ton from the April bottom. So I think this kind of Mike always calls it a shakeout is healthy. It's good. Um, Carl Delfeld, who runs our Cabot Explorer advisory, had a great quote at the top of his issue today from Sir John Templeton, famous investor. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. I think we're somewhere between optimism and euphoria. I think we may have touched euphoria for a couple weeks there. Um, you and I were sort of on here talking like it seems like this market is just Teflon. Nothing
Yeah.
touches it. I think after the jobs report, so the fake out of a big pullback one day after the bad July and May and June jobs report, May and June revision jobs report. I was like, all right, here we go. Here's the pullback. And the fact that it quickly not only bounced back but ran up to new highs after that, I was like, wow, this does feel kind of like euphoria. So it's like I think almost like pseudo euphoria. We're gonna get a pseudo collapse is too strong a word. Correction. Um, and I would be surprised if, it doesn't bottom for another few weeks, even if it's a bit of a slow burn.
Yeah, I've been thinking lately about decision making generally. I think we see it in all walks of life, but people make decisions for emotional reasons, and then after the fact, they justify them with data points and information. That's typically how people work, and that's how people invest, right? Like you're not excited to buy Palantir because of like PE ratios or profit projections. You're excited to buy it because it's running up because everybody owns it, because everybody's talking about it, because it's the next big thing. So it's always hard, and I think it can only be done in retrospect to identify like the specific data point or the specific bit of information that made the market realize, oh, this thing's overvalued, it's time to get out, or um, and I mean, like maybe this is our blow off top. Maybe we're in the midst of it right now, right? We
Yeah.
saw it around this time in 2021. Um, crypto certainly it had been running as if it was like a blow off top with Bitcoin breaking like 120,000. And Circle coin both running up a lot. I think we can only see it in hindsight, but for the time being, it looks like profit taking. It looks relatively healthy and things getting sort of back in line. So it's not a red flag for me. As much as I'm the resident bear, so I should be the one like pointing out all the red flags, and I don't really see it. Uh,
Yeah.
it's richly valued market, but you don't have a ton of alternatives.
Right.
Um,
Yeah, exactly. And again, with sort of two major catalysts that aren't going away between AI and this, well, this will lead us right into the Fed. The possibility and if not likelihood of rates coming down in the coming months, I think will fuel things. Let's get into that. Are rates going to come down in the next few months? What is Powell going to say tomorrow? What could he say that'll change people's way of thinking, whether it's good or bad, or will he just say the usual stuff? Um, I guess it's a lot of it now. One factor now is what will he say that could inflame a certain person in the White House that then tweets something, or what is it? Truth Socials something out.
yeah.
He already threatened earlier this week to, he wants to get rid of one of the members, Fed members there. Who knows what will happen there? But the pressure's sort of on. Powell hasn't caved to that so far, but the expectation is now that next month is when they will start to cut. I think everyone is pricing in a 25 basis point cut for next month. Will he say anything tomorrow, do you think, to change that narrative?
I think so. I think you will.
Really?
Um, yeah. So couple of things. The CME FedWatch tool had futures markets pricing in 95% of a 95% chance of one rate cut like a week ago.
Hmm.
It's down to 75% chance right now.
We're at 71 right now.
70.
Just
It's
looking at it.
fallen 4 percentage points in
Yeah.
the 18 minutes between when I last checked and while we were recording this. Um, the Fed minutes came out earlier this week, and obviously they've sort of fallen to the background because the Jackson Hole speech is the last opportunity for Powell to reset market expectations ahead of the actual statement itself. The Fed members at the time were basically said we wouldn't have voted to cut rates. The risk to inflation is too high, and because of the tariff environment, and we'll talk about it, I think, briefly with retail earnings. The risk of upside inflation is greater than the risk to the labor market right now. Um, the market, I mean, like everybody has been wrong about like all the big banks have been wrong about rate cuts. Morgan Stanley, at the end of 2024, they were saying, terminal rates for the end of 2025 is 3.5%. That would be three rate cuts between now and the end of the year. But they came out and said, well, no, we actually don't see a case for rate cuts. So people are really all over the map with this. The one thing that's been consistent has been Powell, and then prior to political pressure, at least, is the FOMC in general, where they've been really data dependent. And right now, the data is showing signs that inflation is starting to tick higher again in a way that it probably wouldn't absent tariffs or absent like immigration crackdowns, right? Because that adds labor costs earlier in the supply chain, right? Like if you're a home builder, if you're a farmer, whatever, and you have a large immigrant labor pool, it gets tougher to find labor, costs go up, or if you hire American citizens to do the work, costs go up. So there's like all of these things that are sort of bubbling under the surface that could easily contribute to inflation. And right now, the labor market is not showing severe signs of strain. We've had some bad revisions, but it's just a slow labor market. It's not a collapsing labor market. Um, this is Powell is, I'm sure, aware that he is in the spotlight. He's a smart man. As much criticism as he got for transitory inflation a couple of years ago, he has done a really good job of captaining this ship and really had us on the cusp of that soft landing everybody was hoping for. I think he probably comes out and tries to tank the temperature down and remind the market that of the same thing that he's been saying for almost 5 years now or 4 years now. We are data dependent. We're going to make the decisions based on what the data shows us. And it's a sort of warning shot that he's not going to respond to political pressure and he's not going to respond to truths. He's an adult. He's a professional. He doesn't strike me as somebody that's going to kowtow to what I would consider to be unwarranted political pressure. So I think he takes this to give the market a little bit of a gut check to rein in their expectations.
Yeah, I wonder if you could say something that makes investors worry that they won't cut rates next month, but then cut them anyway. Like I wonder
Yeah,
if
he
it
could.
if people are just it's been so priced in that they're doing it in September that any straying from what seems like had seemed like an inevitability, which is, it's already been reflected in the numbers down to 71%. Um, I just talked about, market pullback that could really sort of fast forward things with the market pullback here if he does say something a little hawkish tomorrow. We'll see. I, I still think they'll cut rates at least once, if not. I'm sticking to two the rest of the year. Um, but I agree with you that he's gonna do what's best for the economy and not buckle to pressure. We got to move on quickly. Last thing, a couple big earnings reports this week. Walmart, Target. Neither were great. It missed earnings, but same-store sales were better than expected, and they lifted full-year guidance. Target sales continue to be really troubling to the point where their CEO is stepping down. CEO Brian Cornell. What do you make of these two? Are these damning for the economy? I see the Walmart one I just took as, and they even said, like, look, we said we are, because of the sort of specter of tariffs, um, we're going to have to, sort of account for, what could happen there. So we said that earnings were likely to be down. But it doesn't seem like they're seeing any big downturn in customer interest. Target might be a little different, but maybe that's specific to Target.
Yeah, Target seems to have ticked off everybody. Target pulled a
Yeah,
Musk and like ticked
that's
off
what I was getting at. Yeah,
conservatives, and then by
yeah,
being pride friendly, and then ticked off liberals by backtracking on that. Their revenues were down 0.9% from a year ago, 25.2 billion. Earnings were lower, replacing their CEO, and they're guiding for a low single-digit sales decline. That seems like a systemic issue that's Target specific. I know they caught a lot of flack because they're promoting an internal hire to CEO, and they're not bringing in somebody from the outside. That looks like bad optics and bad sales trends. I don't think it
yeah,
speaks to the state of the economy. Walmart, I think, is a better microcosm of it. They're guiding sales growth. They raised their estimates for sales growth to 3.75 to 4.75 from 3 to 4%. So a 1% range, but they lifted it by 0.75%. That's not inflation adjusted. So if they're if they're guiding for sales growth because they're going to start passing along higher prices,
Hmm.
that's 0.75% is in the neighborhood of sort of 20% of their sales growth. So if they raise prices in the 5-10% range, they probably get there. Their growth in visits was down to 1.5% from 3.6% a year ago, which means more people are buying more stuff and less visits. That means that if you would have normally gone to a specialty store for like a picture frame or whatever, you're just going to pick it up at Walmart because it's a little bit cheaper. That's not great. 2/3 of their products are U.S. sourced, so they're going to pay a price for tariffs, but it's not going to be a crippling price. It just reinforces the same thing that we've been talking about, and that everybody's been talking about, which is the economy's slowing, consumers are less confident. They're doing, honestly, Walmart seems to be doing their best. They took a margin hit to eat some of these cost increases. It does seem like they've sort of worked their way through all of their sort of pre-tariff inventory, and their deliveries actually, I think last month they received 1,900 container ships domestic, like from overseas, versus like 10,000 the year before. I don't have the exact number on it, but it was a pretty significant drop off. So you're going to see the same thing that everybody's been expecting, which is a little bit less variety on the shelves, slightly higher prices. Walmart's going to be less profitable, and everybody's going to just sort of do their best to muddle through. Um, I I think it's an accurate reflection of the reality on the ground.
Yeah, I mean, I think it's like Walmart is sort of microcosm of, like you said, what's happening with the economy, slowing, not imploding.
Yeah.
There's not panic among consumers. People are still shopping, but yeah, it might not be. It's certainly not giddy, and I think there's some hesitancy, and maybe that is, people hear about tariffs, what it could do to the economy, et cetera, and are, being a little more guarded in their shopping, but it's not turning them away. So, yeah, I don't know. I do think the Target thing is more specific to Target, and I don't have any major takeaways that really change the narrative on what's going on with the economy. I think this is just a reflection of what we've been talking about. Um, Okay, let's get to Michael Brush first. Just want to tell you about our offer today. If you go to cabotwealth.com/street, we have a very good offer today. 60% off of Cabot Growth Investor, our signature newsletter. It was started as Cabot Market Letter in 1970 by Carlton Lutz in his kitchen. Since been renamed Cabot Growth Investor, been run by Mike Santola for more than 2 decades. He's coming off his second best year ever in 2024, and still doing quite well this year. You get twice monthly issues, updates on weeks when there aren't issues. So you get something every week. Access to Mike. Mike's great about getting back to his subscribers. And you get, I mean, Mike's been named one of the top market timers by Market Timers Digest almost every year, or multiple years. He's great at timing the market, and great at spotting, new leaders in the next big growth run up. And he's been saying, he's sort of with me that he thinks this pullback is good, that there'll be another set of leaders here in the coming weeks and months. And he thinks, that the market is going up in the next 6 to 12 months. Well, there's your chance to get in, find out what he is recommending and will recommend at 60% off the normal price. It's like $197 for the year. You'll likely make that back. So again, cabotwealth.com/street to sign up for Cabot Growth Investor for 60% off the normal price. Okay, I'll take a quick break and we'll bring on Michael Brush. All right, we welcome on Michael Brush, who is chief analyst of our Cabot Cannabis Investor Advisory. We'll get to cannabis stocks, which are having their best month in quite a while. First, Brad and I have been talking market. So what's the sort of pullback, especially in growth stocks, the last week or so. I said I think it's a good thing. I think we need a bit more of a pullback because things were pretty frothy there. You're good at sort of taking the temperature of if the market is a little oversold, overbought. I know is leaning towards the latter lately. What's your take on what we've seen in the last week or so and where the market is now?
Yeah, the Mag 7 have lagged, and small caps are outperforming, which is an interesting development. I don't know that smalls will lead here, but I think they might. I think they might be a new leadership group, particularly because the sector does well when the Fed cuts interest rates. I'm not so sure we get Fed rate cutting. I think inflation is probably more of an issue than a lot of people are thinking. But generally, overall, I think the market's a little vulnerable here. Look, nobody can ever call what's going to happen next. We can try. I just by luck was posted a bullish piece on Market Watch on the exact low in 22, and so once in a while we get it right. But I think the best you can do really is just identify points when the market's vulnerable, either to downside or upside. And right now, I think the market's vulnerable to downside. And I'm citing, I guess, about 4 or 5 reasons for that.
Yeah.
We can go through them if you want, but yeah,
Yeah,
that's
I
my
saw
take.
you mentioned, valuations look rich, which they are. Sentiment seems elevated. Market has been narrowing, which was happening even when times were good, where it was, we're
Right,
kind of back to 2023, where it was like Mag 7 and a handful of AI stocks really, doing a lot of the driving. And we're entering the spooky season, September, October coming up.
right, exactly. Yeah, that pretty much wraps it up. I think. I think we could see some weakness here, but I don't really know what you do with that because I don't think there's going to be a recession. So what I'm telling people is to, let cash build up, if you're trading, take profits in trades faster, and just be identify stocks to buy on weakness that you like and have the buying power to do so, whatever it takes to get you there. If I was a long-term investor doing, which I am doing, dollar cost averaging, I wouldn't really change anything because I don't think there's a 20% correction caused by a recession on the horizon. So yeah, that's what I think. But yeah, October and September, they can be nasty months,
Yep.
and that's what's right around the corner.
And
Even
have
though,
been very recently, 2022, 2023 bottoms in October on selling that started in September. And, maybe it's starting
right.
a couple weeks early this time.
Yeah, I think it was John Markman who told me years ago that the low for the market, I don't remember if it's October 11th or 12th or 8th, but it's somewhere in there. That's when the
Yeah.
market typically hits a low. There's a couple of reasons for that. When the weather changes, it changes people's mental outlook, right? It makes people more defensive. It makes people, go into harvest mode, hunker down mode. And also you have, all the funds, their tax loss selling season ends at the end of October. So, they want to get out of their losers, way before the end of October. And so that sparks some selling, which makes people nervous, and that compounds on the selling. So I think that's why these 2 months tend to be the weakest.
One of the things that you had mentioned is, which Chris and I were just talking about, not expecting rate cuts because you think people are underestimating inflation or underestimating the weight. Can you touch more on that? What are you seeing
Yeah,
that has you
I
there?
mean, it's really funny to watch the political commentators on X and elsewhere. They don't really know much about economics or the economy. Not that I do. I'm not saying I'm so smart, but they make some very obvious mistakes that maybe I made 30 years ago. And one of them is that Fed rate cutting will promote home sales by bringing down the 10-year or bringing down mortgage rates. And, the Fed doesn't control the 10-year rate, which dictates mortgage rates. The market does. So, and another thing they get wrong is just their discussion on inflation. I mean, you see people saying there's no inflation. Tariffs won't impact inflation. I think it will, and I'm not the only one who thinks that. The Goldman economist has been out saying that and getting into political trouble because of that. But in any case, the tariffs haven't really all fully kicked in yet, and companies built inventory ahead of that, so that's delayed the impact a little bit. it's not going to affect stuff that was already bought and paid for and on the boats coming over. So there's a delayed impact to tariffs. And the companies I study, I mean, they're talking about, partially they're negotiating down prices with their suppliers and partially they're raising prices on their consumers. And sometimes that happens in a stealthy way, like companies can do their own version of shrinkflation, right? They reduce the quality of the product they offer or whatever, or they introduce different tiers. But yeah, I think the tariff impact will be there, and even without that, we're seeing around 2.93% inflation. That's not the kind of inflation the Fed wants to cut rates into. On the other hand, the job market has been pretty weak, and so that's a reason for the Fed to cut rates. So anyway, we'll see what happens, but I'm not so sure the Fed cuts rates.
And one thing before we shift to cannabis stocks, one thing I know that's a big indicator for you is insider buying.
Right.
Talk about that concept and what you look for.
Yeah, this is a great resource, and I love when I talk with money managers, when I mention insider buying, they almost invariably kind of shrug it off. And I love that because it's such a great signal that it's almost too easy, and therefore people don't get involved with it. If you went to business school and you learn how to model and do MPVs and so forth. I mean, that's where your focus is going to be, and rightly so. I think those people add value. But on the other hand, companies, corporate insiders and directors and 10% owners, they have to report what they're doing, and that's a great signal on stocks. And you can compound the strength of that signal by looking at things like cluster buys, looking at office C-suite activity versus directors, the size of the purchasing, the insider record. So there's a whole wealth of information to draw on to get signals on stocks, and it works pretty well as a system. And then you can extract big picture conclusions as well if you look at the overall buy-sell ratios. And that's what you're asking about in terms of the market signal. And, insiders have turned a lot more cautious in the past couple of weeks, and they've gotten a little more bullish in the past week or two, but they're still in caution mode. And that's an interesting signal on where the market might go.
Let's shift to cannabis. Sorry.
One thing I just because you had mentioned front loading inventories ahead of tariffs, and that was something that Chris and I had briefly touched on. Imports for Target in July, 21,000 was their container volumes, 3,000 in August. For Walmart, 10,800 was their container volume, 1,800 for August. So if we're looking at evidence of that front loading and evidence that the prices haven't matriculated through the economy, I think that's a really solid data point and reinforces exactly what you were just saying.
Yeah, that's some interesting detail which I didn't know, and that shows that there's a delayed impact from tariffs, and we haven't even put all the tariffs on yet. So I don't know how people can be saying the jury's in. I don't think the jury's in at all on tariffs and inflation. We'll see.
So shifting to cannabis stocks, they're having a very good month, up about more than 70%, at least according to the MSOS, which is the Advisor Shares Pure U.S. Cannabis ETF that I know you're big on. The reasons behind it, it's rescheduling, the same thing that caused spikes under the Biden administration. Trump has indicated that at least on an August 11th press conference, that he will act the next few weeks on rescheduling cannabis from a class 1 to a class 3 drug. But it sounds like he's hedged on that, and on
Right.
what he would decide. You think, maybe it could be closer to the midterms, or at least that would make more sense politically. Is this the boy who cried wolf again on rescheduling? And it's granted, it's been a different boy. It's been both Biden and Trump over the last few years.
Yeah, exactly. Trump's a tricky one to read. He has this mantra: promises made, promises kept. So that tells us rescheduling is going to happen. But on the other hand, he said the same thing about Social Security taxes, and he totally didn't follow through on that. He claims he does. He did a video the other day where he claims he brought in no tax on Social Security, which is completely untrue. What he did was increase the standard deduction for seniors, which, if you go through the math on a typical person, that gives about 10% of the benefit that a complete no tax on Social Security would have given. So, he missed by 90%. I mean, that's a pretty big miss. And yet he's still claiming that he did it, which is kind of weird. So if you read that through to Cannabis, and you read his hedging on his commentary, you got to kind of wonder if he's going to really do rescheduling, or if he's going to come up with some sort of look. Trump likes medical. He claims to have friends who benefit from the medical use of cannabis around pain or sleep or whatever. And so he's bullish there, but he's very cautious on cannabis elsewhere in terms of general usage. He's not a drinker. He's not a drug user. So that's kind of his default bias. On the other hand, he did support the recreational use legalization in Florida, which is a pretty clear statement. So it's hard to read the Trump tea leaves, but he is saying within weeks, which means soon, and he is hedging a little bit. So we'll have to wait and see. It's a gamble. Cannabis stocks are up a lot. They've been very volatile the last 2 days. They've been viable on the weakness, but it's a risky bet because we don't really know what Trump is going to do.
Yeah, it's interesting that you bring up the no tax on Social Security. I was thinking in the same context with the overtime, like untaxed overtime, where there's a limited exemption of 1,400 tax credit or something along those lines, where it's a limited exemption. And I'm struggling to identify something that might be close to a half measure on cannabis.
Yeah, exactly. Sorry.
Is safer banking, is some version of like what was it, the Cole memo, right? Was Obama's federal non-enforcement memo. Is there a version of that we could see that might allow him to take full credit for half measures?
Yeah, that's exactly what I'm trying to think through right now. And I can't really think of one because to promote medical use and to promote medical research, which is the cousin of that, which I think would be a good thing, you really got to bump it out of Schedule 1 to, I don't know, maybe it goes to Schedule 2, but that's still, I don't know. I don't really know what the halfway measure would be. So I don't think he has an out in that way. You have Pam Bondi in the mix, and I don't think she's really in favor of any kind of liberalization on cannabis. That's not her history. That's not her record. If you watch her body language during that press conference, she averts her eyes whenever Trump said anything about a positive outcome happening. That's basic body language for what it's worth. But when people avert their eyes, it usually means that they disagree with what's going on around them, or they're telling a half truth. So Pam Bondi is not really very bullish on it, but really it's up to Trump. He's that's the way his administration works. But the half measure thing, I've been struggling with that, and I can't think of what he would do there.
Would you, at these, given the run up,
Right.
seeing so many false starts, would you recommend selling at these levels, or at least not buying cannabis, or how would you treat this mini
Look,
run?
we're getting whipped around here. We've had nice gains. I'm personally not selling the strength here. That may turn out to be a really stupid move, because if he comes through with some half measure that's really like a 20% measure, this group falls hard. But I think the signals. Look, it comes down to this: the majority of people, even Republicans, support reform, legalization, rescheduling, however you want to say it, and that's a voter issue. And so he promised in the swing states to get votes, and he's kind of got to come through. The question you alluded to the midterms earlier, that's the timing is an issue. Boris Jordan at Curaleaf points out, and I agree with him, that the timing would make a lot more sense maybe towards next summer, closer to the midterms. So But he is saying in a couple of weeks. Anyway, to answer your question, I'm going to bet that Trump comes through with something pretty bullish for the group. It goes up more, and then I think it's a sell at that point, maybe a day or two or three into that news. The cannabis sector tends to take about 2 to 3 days to peak out after good news. You don't want to sell that first jump because there are rescheduling, it'll be a huge tax benefit for the cannabis companies, but issues persist for the group, that's for sure. So gravity will come back.
I'm going to pitch something and see if maybe if my thinking lands where you are.
Hmm.
So what about a slow roll? What about,
Hmm.
let's say the president comes out and says, I'm instructing the
DJ,
obviously, yeah, I'm instructing the
DOJ. So,
DEA, DOJ to review the prospect of rescheduling it. I'm giving them 120 days or 90 days or whatever review window. Make that announcement in like October or let's say September, and then the beginning of the year you can then slow roll it for another 180 days or whatever, and it gets you close to the summer, but it sort of stays front of mind for voters and for investors. Is there maybe a slow roll version that hits that full credit half measures thing?
yeah, that would make a lot of sense, right? Because it would keep the issue alive and as a positive for the Republican voters throughout I'm sorry, for the, I guess, really kind of more the midstream voters. It would keep that. Yeah, it would keep the issue alive as a bullish issue for many, many months. So that would make sense. On the other hand, the new DEA head and Trump both have indicated this is a top issue that they want to address,
Yeah.
and so that signals some action soon. Anyway, it's reading tea leaves. It's really hard to know. We can only guess, and I'm going to guess that Trump follows through on his promise. I might be wrong.
Yeah, it almost cannabis. There's a reason we have this advisory. It seems that cannabis, it seems inevitable given, how popular legalization is and all the polls that you have referenced. It seems inevitable that there is going to be a much longer extended cannabis rally at some point, whether that's rescheduling, the Safe Banking Act, whatever. It seems like you mentioned you're a buyer at these levels. Even if you're punished in the short term, it seems like something will happen, perhaps as you mentioned in the next year and a half before the midterms, that will trigger a longer rally. So it seems like even if you bought at these levels and your timetable is the next 18 to 24 months, you'll probably be rewarded, right?
I think so because look, if rescheduling happens, it'll be maybe a little bit of a domino effect in the sense that it'll make
Right.
banking reform easier. That'll be a positive, allowing banks to making it easier, let's say, for banks to get involved with serving cannabis companies. You'll see more, state liberalization, state legalization. Pennsylvania probably soon happening. We have Kentucky with medical coming in. It's sort of sweeping through the South now, which has been a holdout. And so yeah, I think over the long term, we'll see some strength for the sector. But there are issues. I mean, there's a lot of debt that needs to come due, and there's the price deflation continues. So it's really like we mentioned MSOS. That's not a bad way to go. But there's also which I've been mentioning in the letter. There's a bunch of cannabis stocks that have better financial strength than the rest of them because there's, I think, something like 2 billion debt coming due in the next 15 months. That's a lot. And these companies don't really have the cash flow to necessarily support that, except for a few. And those are the ones I would go with. I've been referencing them in a letter, and that's where people can find them if they want to.
Yeah, that's it. If people can want to read more from you, as I said, you run Cabot Cannabis Investor. It's on the premium advisory page of the cabotwealth.com website. seems it's a good time to join and get help you sort of navigate through the choppy cannabis waters, but it seems like increasingly more promising waters. Again, that's Cabot Cannabis Investor. You can also read Mike Gawley's a column on Market Watch. Was that a weekly column?
Yeah, more or less.
Yeah. But Michael, thanks for joining us
Thank
today.
you.
It's great to get your insights on all things market and cannabis in particular. And let's hope the cannabis rally continues.
Great. Thanks, guys.
All right. Thank you. And we'll see you next
Thanks.
week on Street Check.